Assalamualaikum everyone. So we will be presenting about the Islamic finance, which is the Malaysian sukuk market. In this slide, I will compare the specific roles of Bank Negara Malaysia and the Securities Commission Malaysia in the sukuk market. Both BNM and SCM play very important roles in Malaysia's financial system, but their functions and areas of responsibility are different. First, I will explain the role of Bank Negara Malaysia. BNM is Malaysia's central bank. It is responsible for monetary stability and the regulation of Islamic banking institutions. Its role in the sukuk market is mainly indirect, supporting the system through liquidity management and financial stability. BNM focus on the Islamic money market, particularly short-term sukuk used by Islamic banks for liquidity purposes. It also issues Islamic instruments to support monetary operations. And finally, regarding market development and infrastructure, BNM strengthens the institutional foundation of the sukuk market by ensuring efficient payment, settlement and liquidity infrastructure for Islamic financial institutions. Next, I will explain the role of the Securities Commission Malaysia or SCM. SCM is the capital market regulator. It plays a direct role in the sukuk market by supervising sukuk issuance, market conduct and investor protection. The SC focus on capital market sukuk. The Securities Commission sets guidelines, disclosure requirements, and Sharia governance standards for sukuk issuers. And lastly, Securities Commission develops the sukuk market by creating clear issuance frameworks, standardized documentations, and promoting innovations such as sustainable and retail sukuk.
To understand how Malaysia become a global leader in Islamic finance, we have to look at how sovereign sukuk, which are government-backed Islamic one, serve as the primary catalyst for the growth. It starts with the Security Commission, their role as a gatekeeper. By centralizing the approval process, they ensured that every issuance was not only legally sound according to the market regulation, but also 100% compliant with Sharia principle. This provided the credibility needed to attract global investors. Moving to the second point, why does the government need to be lead? The answer is benchmarking. Sovereign sukuk establish a risk-free yield curve. Without a clear government benchmark, private corporations wouldn't know how to price their own sukuk. This is essential for developing a liquid secondary market where their instrument can be traded freely to ensure the capital stay fluid and accessible. While the private sector initiatives are important, they lack the weight of government backing. When the government leads, it signals a long-term political commitment to the Islamic economy. This reduces market noise and uncertainty.
Next, I'll be presenting the evolution of sukuk structures in Malaysia, showing how they have grown from simple contracts into innovative digital instruments. We start in the early 20s, where sukuk were mainly simple and asset-backed, dominated by sukuk ijarah, a lease-based structure. This straightforward model helped build early confidence in Malaysia's Islamic capital market. As we move into the mid-20s, sukuk structures become more flexible and asset-based. Two important developments were asset-based ijarah, which focus on beneficial ownership, and murabahah sukuk, which use the cost-plus-sale concept. These structures become widely used because of their clarity and Sharia acceptance. In the late 20s, Malaysia expanded into profit-sharing sukuk, particularly musyarakah and mudharabah. These models introduce genuine risk sharing, where investors and issuers share profit and losses. This reflects more authentic Islamic finance principles. Entering the 2010s, we saw the rise of hybrid and blended sukuk using multiple contracts within one issuance. Examples include combinations like ijarah murabaha, istinad ijarah, and musyarakah wakalah. These structures allow issuers to customize sukuk based on specific project needs, mixing physical assets and receivables for greater flexibility. A major milestone came in 2017 when Malaysia launched the world's first green sukuk framework. This paved the way for green, social and sustainability sukuk, often structured using wakalah ijarah or musyarakah wakalah hybrids, supporting environmentally sustainable development. Finally, in the 2020s, sukuk entered the digital era with blockchain-based and tokenized sukuk pilots. These innovations aim to improve transparency, reduce costs, and increase accessibility for global investors. In conclusion, Malaysia's sukuk journey shows strong innovation from simple leasing structures to to complex hybrid and now digital sukuk, solidifying Malaysia's leadership in Islamic finance. Thank you.
On the left side of the slide, we observe the sukuk wakalah structure. In this model, investors provide funding that is allocated to renewable energy development. This capital is channeled through a special purpose vehicle (SPV), which is responsible for issuing the sukuk certificate and managing the investment. The funds are then invested into a green energy project, namely a solar power plant. For the Sharia compliant, the key point of this analysis is how the green sukuk remains firmly grounded in Sharia principle. Firstly, the investment is asset-backed, ensuring that the sukuk represent ownership is in a tangible project rather than a pure debt obligation. Secondly, the structure avoids prohibited elements such as riba by emphasizing the profit sharing and ethical investment. This illustrates how modern financial innovation can be aligned with the Maqasid al-Sharia, particularly in safeguarding the environment for future generations. From an environmental perspective, this innovation goes beyond supporting renewable energy and reducing the carbon emission. It also serves as a bridge to a broader investor base. By incorporating ESG, which is environmental, social and governance standard, Malaysia has positioned sukuk as an attractive instrument for conventional international investors who are committed to sustainability. This strategic innovation explains why Malaysia continues to be a global powerhouse, maintaining a significant share of the global sukuk market despite the rising competition.
There are two recommendations on how Malaysia can maintain its leadership in the global sukuk market, which is enhancing global regulatory and Sharia harmonization and leveraging financial technology such as blockchain. So now, let me explain more about enhancing global regulatory. Currently, the global sukuk market is growing rapidly, but differences in standards across countries can create challenges for issuers and investors. First, Malaysia can work closely with international standard setting bodies such as AAO-IFI, IFSB, and IOSCO. Through this cooperation, Malaysia can help develop uniform sukuk standards. These standards can cover important areas like sukuk structures, legal documents, disclosure requirement, and investor protection. When both issuers and investors follow the same standard, sukuk can be used and traded more easily across different countries. Second, Malaysia can promote standardized sukuk structures and documentation. For example, common sukuk types such as ijara, murabaha, and musyarakah can be designed using agreed templates that are accepted internationally. This helps reduce legal uncertainty and lower issuance costs. Issuers will not need to redesign sukuk structures for each country, making the issuance process faster and more efficient. In conclusion, Malaysia can cooperate with international standard setting bodies and promote standardized sukuk structures and documentation. So now, let's move to the next recommendation, which is leveraging financial technology such as blockchain. Traditionally, investing sukuk requires large capital and access through formal institutions. So, how does blockchain work in sukuk? Blockchain works by tokenizing ownership shares into digital tokens on a distributed ledger using smart contracts to automate compliance and payments, creating a transparent, efficient, and cost-effective system. Tokenization of sukuk means breaking it down into digital units that can be traded on the blockchain. This makes sukuk more accessible, more liquid, and easier to manage for everyday investors. Smart contracts are self-executing programs stored on blockchain networks. They handle tasks like distributing returns to token holders, managing ownership transfers, and enforcing compliance rules without manual intervention. Blockchain matters for the sukuk market because it has greater transparency because blockchain operates on a distributed and immutable ledger where all authorized participants share the same transaction records. It also has lower costs as it eliminates intermediaries and reduces administrative expenses in financing and remittance. Lastly, conditions like no riba, asset backing, and ethical contract terms can be embedded into smart contract logic, making it has stronger Sharia governance. In conclusion, by implementing blockchain, Malaysia can modernize its Islamic capital market infrastructure, enhance Sharia integrity, improve efficiency and transparency, and broaden investor participation. This advantage positions Malaysia not only to defend but to strengthen its leadership in the global sukuk market.